Good morning, everybody. Welcome to another daily market report brought to you by Mike Bjork. Today is Thursday, November 17th, and we do got a few economic news scheduled for today. We'll start off with the initial jobless claims that we get every week. Last week we had 393,000 new jobs, or not new jobs, but rather people applying for unemployment, which was a decent number because it was under 400,000, which seems to be kind of the magic number these days. We figured it'd go up a little bit to 397, but actually dropped down to 388. So those are actually great news. We would have had 3 weeks in a row, but because they had revised 3 weeks ago from 397 to 400,000. But this is great news. 388,000, we'll take it. Again, it's the lowest I've seen in a while. We've been averaging, if we dipped under, it's been usually in the 390 range. So congrats. Housing starts. We had 630,000 the previous month, and we figured it was going to drop down to 605, but we had better news. It only dropped down to about 628,000 housing starts, so a lot better expectations. So two good economic news scheduled, great news actually. And then we got the Philly Fed. We had previous month reporting at 8.7. 10%, we figured it was going to jump up a little bit, kind of like the New York, what we saw earlier this week with the Empire State Index, and actually dropped down to 3.6. So not too good on the manufacturing side, at least in the Philadelphia region of things. So they actually seen a slowdown there. So let's go ahead and take a look at the headline news here. And what we got here is the Dow, and pretty much everybody's down a little bit today. Yields, one of the things that's rising more concerning again is we've been seeing these rising yields for a lot of the European nations, and that the magic 7 is an important number because it's when companies or countries are paying over 7% for to be able to borrow money, it's hard to sustain that payment, that cost of borrowing that money. So that's why it's a magic number. It's basically almost represents that they're going to have to get a bailout just to be able to cover those expenses. So Spain, the yields right now for Spain just reached over 7%. We saw that with Italy. Of course, Greece has been over. Another country hasn't hit 7 yet, but it went up. It has been France. So again, a lot of concern. And that's the reason why the concern with these high yields that we're talking about, that European central banks have been trying to buy these to keep the yield spreads down, but investors are demanding more from these countries because they're higher risk of defaulting, and so they're charging more. If you want to borrow money, you have to charge more. So that's just creating the problems over there. So with that in mind, basically, looks like the investors are kind of putting more emphasis on the European news versus our domestic news. As we've seen, we've had some decent news, but it's not really reporting in the stock market nor even the bond market as much. It's kind of going, going flat in more than one way. And I think they're looking for a little bit bigger news to make it one way or the other. So let's go ahead and with that in mind, let's go ahead and take a look at the bond market, see where interest rates are rising or lowering. As you see, we've been going this pattern here, as I mentioned before, going this flat, or not flat, but into a sideways pattern here. And basically, they're looking for some type of news, a big news, to actually break it out of this pattern here. So it goes either up or down for the bond market. Same thing for the stock market. So they're looking for some type of a key to show where it's going to go. Sorry, this is kind of a little messed up here. I'm not sure what's wrong with my system here, but these floor and supports are showing up here and kind of out of whack a little bit. But interest rates are a little bit worse today. As we see, we had a drop yesterday a little bit. The red represents a drop. And then we've actually opened a little bit lower today versus yesterday. So depending on the pricing when those came out yesterday and today, interest rates will be a little bit worse, slightly worse today compared to yesterday. So, all right, folks, you guys have a wonderful day. I will catch you again tomorrow. And if there's anything I can, if you guys are on my website, mikesdailymarketreport.com, please subscribe. You'll get your daily posts sent to you via email, as well as you're on my YouTube channel, Mike's Daily Market Report, and subscribe there as well. You guys have a wonderful day.